Hello, everyone. It is about that time for a market update. It has been pretty boring, kind of chopping through here. This is the Bitcoin market cap, all of the money that is into Bitcoin. As you can see, we've had this big run up, and now we're kind of going sideways a little bit. Kind of waking up to some news over the past week or so of just like, oh my gosh, the sky is falling. It's crazy. There's still $1 trillion in Bitcoin, so let's not panic too much. But let's take a dive into things. And hey, where are we? So obviously, oh boy, this is a lot of alerts. Let me clean this up just a second. Let me just get rid of that one. Clearly been running up here quite a bit. And let's kind of dig into it. As you can see, I've kind of got a box around our range here. There's really nothing since pretty much February that's happened. But we are getting really close to having a conversation. And so want to take a moment and obviously have that chat. So our kind of two areas to really be watching right now are this big liquidity pool down here. Let me kind of move this guy over just a tad bit. But literally all this liquidity down here has not been filled and doesn't mean that it needs to be. But it does mean there's a lot of liquidity down here that we could see some actions in the 54,000, 55,000, 56,000, something like that range. We also have these wicks down here on these candles right here that have not been filled, which is totally acceptable and fine. This was really the one that we've been looking at. If I can kind of zoom in here, basically really the action, the price action that you'll see here is we've been up and down, right? So as it kind of came down, really kind of looking at the bottom of these wicks and saying, hey, if we can hold that, we'll kind of keep going up. But this one, as you can see, got broken. That's creating a lower low wick right there. And that pattern just kind of created itself over and over and over again. And yesterday or the day before, this was really our big one to watch, is if we were going to hold this $63,000 level, we should have come down, got it bought back up, come back down, retested this same level at 63,000 and then gone up if it was going to go up. If it was going to go down, clearly it would just break it. And there's there's a lot of liquidity in here that clearly it can just run. And so it created this giant red candle. And so that's really what's happening. And you can see right here, this is our wick to hold. We need to close, which means this solid box needs to go above the bottom of this wick right here. If we really want to take a look at it, let me zoom in. Probably about 60,150, 60,160, I mean. I could just hover over it right here and see that our absolute low is 60,150. Exactly. So that's kind of our main thing to watch. I would say that that's a pretty strong kind of one to consider, as well as even these over here. So it's a pretty gray area. If I wanted to draw a little box, I would do something like this. And I would say, well, let me extend it over. I would say it needs to close somewhere in this little box that I just drew. Obviously, right now the price action is above that, and so that is positive. If this does not hold, we'll be going to retest this $56,000 line, and if we can't hold where these wicks are, then your liquidity pool is going to get pretty consumed. And so I would expect that with this fast of a price action, if we end up anywhere down here, we have one of two things that are going to happen. We're either going to get down there really quick and zip right back up, or what we're going to do is we're going to drop down into this liquidity pool and kind of have this choppiness just in this box for a second before kind of breaking back up. If we do zoom out just a little bit and really kind of bring it back, you do see that we've kind of got these tops here. We've got one connection here. And again, let me just make it a little bigger for everybody. This is a top, our most recent high after all this, negative space over here from our lows. And so if we take that and we start connecting it, and again, these trend lines are just simply, you can draw them a million different ways, but we're just looking for patterns. We're looking for consistency. We have one touch, two touch, three touch there. Obviously it broke through. And then after it breaks through, anytime it goes through a trend line, we want to see it come back down and test it as support. That's what tells us this confirmation is ready to go up. Ironically, it literally happened right here on April 19th. So we've got 3 touches. Now we've got 4 touches. It should go up from here, but we lost that support and it came back down. Now, what's fascinating is it was like a fake out. This is a little bit of a weird one, and this is exactly to show that trend lines aren't everything, but just simply kind of guidance. But this is a little bit of a fake out. We could go look and see, was there any news on May 1st or 2nd, but ultimately it doesn't really matter. The bottom line is we faked out there. We came back down. Maybe this is considered a retest for the way up. But as things have happened, clearly been breaking that line. And again, we're either going to, come down here and deal with some lower action, or we might even, if I could extend this, we could say, hey, maybe we test the bottom of this line as, as resistance. And then it obviously breaks down even further. Based upon where we are in the market cycle, I do think what's interesting is, man, we've had quite the explosive growth in the short term. This is what I would consider to be a bull flag, which just means you have your flagpole here, and then that box that I just deleted, that's your flag. And so anytime that's chopping sideways, that's bullish, meaning that we're probably going to be going up. But when you look back at really kind of some of these other opportunities from the past, here was really our last all-time high, which would match up with this one in 2021. Here's the one previous, 2017. I also just realized I think I said resistance instead of support over here, but it doesn't really matter. Support means that when we come down, we hit it as support, right? Like the floor. Whereas if we're coming up, it's going to be resistance like the ceiling. So if I'm hitting it from the bottom, that's going to be resistance. And then if I'm coming down and it like bounces on the top here, that's going to be support. But anyway, as you can see, big sell off here. Let's look for some similarities, right? Big sell off here, kind of have a little bit of a dipper is what I call it, which is a made up word. But here's your top. It comes down, has a little bit of a dipper right there. And then we have a big run up before we have a big sell off. This was COVID right here. So from a run up to a sell off at this time, $14,000 is what it went to for a $20,000 high. And then it came down to the $3,000, $4,000 range during COVID. And then that was ultimately the catalyst where pretty much it kind of shook out all the players who were just gambling, shook out all the shorts and the longs, and the people who were just trying to make little pennies and here and there or every second with these high frequency people. But then it decides, cool, we're going to run. And so that really gives you a little bit of an understanding of what we see. So we've got our little dipper here. What happens? It runs up, kind of sells off. And I honestly was expecting quite a little bit more of a sell off really in here. Kind of felt like there was a little bit more liquidity right in here that just, we weren't addressing. But that's the fun thing about markets is they kind of don't give a crap about you. There also is this CME gap down here, which is just the futures. If you go back and look at the futures chart, I think it's this one. These are the gaps in the markets that have not been filled or have been filled. As you can see, if I zoom in, for those who haven't followed me much, this is where the day ended. This is this is where the price action ended, and then this is where the next day started. So it leaves this giant gap right here, and that gap, has a very high probability of getting filled, typically about 90%. And so we don't consider those as like, hey, home run, but we do consider that like a magnet that's pulling towards those things. And so here was a gap that I grayed out because it got filled. Here's another one I could say, cool, we nailed that one. So let's go ahead and darken that one. This one, not the case, hasn't been filled. Not a big deal. This gap, here's another really good example of that created this gap in space. So it started running up and it went from 40,000 up to 50,000 basically. And then was like, oh wait, once we start falling, we want to fill this gap. So it filled that gap. This one's now, we'll just kind of darken that one a little bit. And then we kind of keep going. There's really hasn't been any gaps in here. And so we kind of just let it lie. We're at 60,000, this is at 20,000. What are the chances we're going to hit that? Pretty freaking slim, in my opinion, at this point. Would it be awesome? Heck, yes, it would be awesome for those who are looking to buy. But at the end of the day, that's what's kind of going on with Bitcoin as of right now. These are the main two things. I don't expect really pretty much anything to happen kind of until like maybe third or probably even fourth quarter of this year. I really just kind of don't. I think it's just going to bounce around. It might have a new high, might have a new low. There's really nothing stopping it from kind of this range right here. based upon the previous price action. Um, so you just never know what's going to happen with the markets. There's so much buying pressure right now. If we go over and we take a look at the dominance, this is, again, this is all of the money that's going into Bitcoin in percentages. So you can see that really kind of the most recent support, it came down, bounced as support, bought back up before it lost that support. And then we kind of went sideways in this range. At one point, 40% was kind of the lower side. So as the Bitcoin dominance comes down, just a reminder, that means that money is leaving the Bitcoin space and going to another space. Traditionally, you're going to see it goes to stable coins like USDC or Tether, or something that's pegged to the dollar, so it's always worth a dollar. Or typically what you see is you see it move to the altcoins. So what they do is they take their profits in Bitcoin and then move it over to altcoins, and the altcoins all pump. And so as Bitcoin has been going up, it's taking money out of the altcoin markets and it's moving it into the Bitcoin market. And so if we come over here and we actually look at, for example, let me actually do this one. This is the total three market cap. Total three just means that it's all the money except for Bitcoin and Ethereum. So it's basically all the altcoins, what's happening in the altcoins. And so you can see it obviously has quite the volatility. I could actually lay it over, but I won't do that on this video. But oftentimes what you see is when one is pumping, one is dumping. Not always. It's just not that linear. But at the end of the day, it is something that we kind of look at. So the higher that the Bitcoin dominance goes, the more that money is flowing into Bitcoin. And so you'll see this probably in 2025. There will be a fairly strong kind of pull for Bitcoin. You can really see how since last September, back here in 2023, it's just been a really strong pull for Bitcoin because of just money moving into it. Now, if I also go to a weekly chart here, actually that's going to be garbage. That doesn't actually show me anything. Scratch that. So let me kind of jump back down and we'll kind of look at a couple of different scenarios really quick. Like I said, I see new highs here, and this was like technically our 2021, from this point to this point, that's our new high. And I will make another video actually kind of showing you the time differences between these and really kind of how we use statistics, or how we just simply look at the averages of, well, how often does this happen, and what can we expect? How can we expect something else? I've done all the math on that. Thanks, ChatGPT, and charted it all out for you. And so I'm super excited. I'll make a whole other video just on that. And I'll even show you what my price prediction is based upon the math alone. Now, that means nothing when the seller sentiment is involved, and that doesn't really mean much for markets. But, you have to have a thesis and you have to have data to support that thesis. And so where was I on this one? So on this one, yeah, we've got our highs over here, and we've kind of tapped that, which is really great. I kind of consider this to be like our $14,000 range over here. I do expect a little bit of a sell-off, but we just haven't had that. I think this is extremely overbought. There's a lot of people buying it up, but we haven't even like scratched the surface as far as like how much money is going to come in during the bull market. And that's just because that's how FOMO works. People are just like, oh, how much is it? 100 grand, 200 grand? Great. Let's get in. This is going to be awesome. I think a lot of the institutional players are starting to get in a little bit more. The ETF was obviously approved for Bitcoin. And so because of that, a lot of money was flowing into Bitcoin, but money is actually flowing into an ETF, which has to be backed by Bitcoin, which is a different like order routing. Essentially, like if Fidelity is your custodian and you say, hey, I want to buy, whatever, $10,000 of Bitcoin in the ETF in my retirement account. Cool. You bought $10,000 of an ETF. And if you're, Fidelity. So if it's Fidelity as the example, then Fidelity has to own $10,000 in Bitcoin. So they have to acquire that somewhere. Well, they don't buy it on the open exchanges like you and I would. They're buying it over the counter, institutional, basically a place where companies can buy them, right? And they call them over the counters. And so basically what that means is that price action is not accounted for here. So anytime kind of there's selling or there's buying, right now it's at 178.31, for example. In order for someone to buy, if a whole bunch of people started buying right now, there's only so much on the order book that people are willing to sell right now. So this order will get sold, and then this one, and then this one, and this one, and the price will have to go up. The very nature of the buying and selling, if buying causes the price to go up, selling causes the price to go down. Just because, for example, at $60,000, there's, say, a bunch of buyers. Well, there's only so many sellers. So if, as a dumb example, 100 sellers sold one Bitcoin and there's 500 buyers to buy one Bitcoin, then what would happen is 100 people would get to buy Bitcoin at $60,000. And the 101st person would have to buy it at $60,001 or $2 or whatever the next highest person is willing to sell it at. And that's what causes that price to go up or reverse that entire thing for it to go down. Whereas institutions, on the other hand, they can go to an over-the-counter, and over-the-counter will pretty much have, again, let's just say 600 Bitcoin. And they'll say, how much do you need? You need 500 because you've had all these ETF orders. Cool, we'll sell you 500. It's kind of going to be a fixed averaged price. We're going to say it's in this example, we'll sell it to you for 60,500. And sometimes it's reversed. Sometimes the institutions, they've bought it in the 50,000, so they sell it to you at just under market. They sell it to you at 60,000 so that you don't have to become your own competitor. But getting sidetracked here, the point being that they can buy those 600 Bitcoin and it doesn't impact any of this price action. And that's kind of something to consider, is that the institutional plays are bringing a ton of adoption and a ton of need into like money into crypto, which is awesome. And it's going to be great. But ultimately, all that does is reduce our risk as Bitcoin holders, because there are still 21 million Bitcoin, and that is all there will ever be. And so the number of millionaires is more than 21 million, meaning that not everyone can own one full Bitcoin. Not every millionaire can own one full Bitcoin. Michael Saylor is on an absolute rampage right now, trying to buy every Bitcoin he possibly can. And he's only like around 1% of the entire stock. So, I mean, it's just not very likely. And so the longer time goes on, the higher the price has to go, just because people aren't selling their Bitcoin. And I will work on getting some data to show you how many people are holding Bitcoin that have not moved that Bitcoin in, a year plus, which means they've bought it, they've secured it, and they're not going to sell it for a long time. And they may never sell it. And that's kind of the key of Bitcoin, is in the future. It's hard for us to wrap our hand around this now, but in the future, you may never have to sell your Bitcoin. That is kind of the beautiful part about this financial network, is you buy it and you never have to sell it. It becomes an asset that you can borrow against tax-free. And that's ultimately, that's the game that Wall Street plays. That's the game the wealthy plays. And ultimately, it's something we're all trying to play as well, is we want assets that are valuable, that, we don't ever want to have to sell. We just want it to go up forever. As a silly example, not saying you shouldn't sell your Bitcoin. You will see that there will come a day where I will sell my Bitcoin as well, but you'll notice that I also buy back in. So a common example that I share with people is like over here. So I kind of got involved with all of this stuff, and as we started, really kind of figuring it out, I really got involved in this little trench right here. So clearly, kind of it went up. We definitely took a little bit of profits in here. But obviously I bought back in when it was lower. So if I had one Bitcoin and I bought it, let's say I sold it at 40,000 and I bought it at 20,000, now I have two Bitcoin for that same amount of capital that I put in. And that's kind of my game, is I'm very fascinated in accumulating the appreciating asset. That's all I really do. I don't really give a crap what this number is. I only want more of whatever this asset is. And so every 4 years, if I can continue that cycle, we'll get that going. But for those of you who have been with me a long time, you'll know that I'm never going to sell 100% of my Bitcoin. In a perfect world, I want to sell chunks of it, and I want to have some of it that is just held in cold storage for my kids, grandkids, great-grandkids, who knows, whatever. So that's a little bit about what we got going on. Kind of exciting. Really the dollar is kind of bouncing around as well. We should have had a breakout by now. This is a weekly chart. Again, we've had some resistance right here where this blue line is, pretty strong resistance. We broke above it. We came back down. Now we're finding support. So again, that is bullish. That means the dollar is going to be probably pumping up, especially in an election year. And what I would say for that is that just means that when the dollar goes up, typically assets go down, because all of your money is moving into the basket of dollars, if you will, the dollar index here. And, it's just being rearranged. To me, what this means is that over time since 2015, the dollar's been strong, which is great. But the more this goes up, it just means that the less certain people are in what's going on in the market. And so, which is hilarious because you look back over here and it's, this is when we were really the most uncertain. And so we only had this little pump and then it just kind of came back down. So, but that's kind of how we read that. This is really our next really large resistance is $120. And so it wouldn't surprise me if, throughout the next year or two, we work our way up to, 120 and just go from there. Let's see. Other than that, I think that's it. Obviously, just like anything else, when in doubt, zoom out. If you're panicking because, oh my gosh, the price was at this and now it's, it was at 70,000 and now it's at 60,000. What's going to happen? Is it going to go to 20,000? I mean, it's not statistically likely, but that would be cool for somebody like me. You can also look at this on a logarithmic chart. Oh, they moved my button. Oh, because I'm on weekly. If we look at this logarithmically, you can see that, when in doubt, no, I should be able to do it weekly. There we go. When in doubt, zoom out from the beginning. Well, this even goes back to 2015. This didn't even go back all the way. But we're up and to the right, and that's what we want. And you'll see kind of that there is this really kind of a trend in here where really kind of riding on top of it or under it or whatever. You can go look up the stock to flow chart and see that as well. But I'll kind of leave you that. I will leave you with that for now. And look at this. As soon as I say this, we're getting right under 60,000. So this is going to be interesting to watch. I want to see kind of what happens. Obviously, this wick's down here. We will fill half of this wick, or at least all of this wick, if we're going to stay here and go up. But we're going to play in this little yellow box for a hot second, and while they figure that out. And if we can hold this, we have 4 hours and 39 minutes to close above our wick over here. So we need to finish our day in about 4.5 hours. We need to finish it above this if we're going to go up. Otherwise, we might be seeing down here, but it won't be lived. It will be short-lived. And in my next video that I'm going to make you about market cycles and about what's going on with a price prediction, you will see how we can kind of time this out and have some fun with it. So hope you're doing well. Feel free to leave some questions and I'll do my best to answer them. Take care.